Good day, sir. This is our Accounting Information System Glossary of Terms of Chapter 3 entitled Broad Ethics and Internal Control. Audit Trail, which presents verifiable information about the accuracy of accounting records. If accurate, sufficient documentation is maintained, then an audit trail can be established, which can recreate the details of individual transaction at each stage of the business process in order to determine whether proper accounting procedures for the transaction were performed. Authorization refers to an approval or endorsement from a responsible person or department in the organization that has been sanctioned by top management. Availability. The risk related to availability is system or subsystem failure due to hardware or software problems. Batch totals, which is merely a summation of key terms in the batch, such as hours worked, and compare this batch total along various stages of processing. It, if at some stage of processing the batch total is no longer matched, this means that an error has occurred in processing. Check fraud involve the customer's use of stolen fraudulent credit cards and checks. COVID for control objectives for information technology. COVID is extremely important guidance for those who design or audit system. COVID framework. It is a comprehensive description of the risk and controls in IT environments. Code of Ethics states the principle and expectation governing the behavior of individuals and organizations in the conduct of internal auditing. Collusion occurs when two or more people work together to commit a fraud. Collision can occur between two or more employees and customers, and employees and vendors. Compensating control. That lessens the risk of negative effects when other controls are lacking. Supervision as a compensating control is appropriate in larger organizations too, where there may be situations in which it is difficult to fully segregate duties. Computer fraud, the use of a computer or computer system to help execute a scheme or illegal activity, and the targeting of a computer with the intent to alter, damage, or disable it. The next one is confidentiality. Is the confidential information about the company or its business partners may be subject to unauthorized access during its transmission or storage in the IT system. Control activities. As the policies and procedures that help ensure the management directives are carried out and that management objectives are achieved. Control environment. Control environment sets the tone of an organization and influences the control consciousness of its employees. Corrective controls. Corrective controls are those steps undertaken to correct an error or problem uncovered via detective controls. COSO undertook a comprehensive study of internal control and in 1992 issued the Internal Control Integrated Framework, commonly known as the COSO report. The COSO report has provided a standard definition and descriptions of internal control accepted by the accounting industry. Cost benefit holds that the cost of providing information via the financial statement should not exceed its utility to readers. Credit card fraud involves the customer's use of stolen or fraudulent credit cards and checks. Customer fraud. Customer fraud occurs when a customer improperly obtains cash or property from a company or avoids a liability through deception. Defalcation involves theft of any item of value. Denial of service attack is intended to overwhelm an intended target computer system with so much bogus network traffic that the system is unable to respond to valid network traffic. Detective controls must be included in an internal control system. Detective controls help employees to discover errors, frauds, on unauthorized events. Earnings man Earnings management is the use of accounting techniques to produce financial statements that present an overly positive view of a company business activities and financial position. Employee fraud is conducted by the non-management employees. This usually means that an employee steals cash or assets for personal gain. Foreign Corrupt Practices Act, intended to prevent U.S. corporations from bribing foreign officials while soliciting business. That act required corporations that sell stock in a regulated stock exchange to maintain a system of internal controls. Fraud can be defined as a theft, concealment, and conversion to personal gain of another money, physical assets, or information. Fraud triangle is a framework designed to explain the reasoning behind the work decision to commit workplace fraud. Fraudulent financial reporting involves the falsification of accounting reports. General authorization is a set of guidelines that allows transactions to be completed as long as they fall within established parameters. Hacking is the term commonly used for computer network break-ins. Hacking may be undertaken for various reasons, including industrial espionage, credit card theft from online databases, destruction or alteration of data, or merely thrill-seeking. Independent checks serve as a method to confirm the accuracy and completeness of data in the accounting system. Industrial espionage, the theft of proprietary company information by digging through the trash of the intended target company. Information and communication, to assess management and control the efficiency and effectiveness of operation of an organization. Management must subject access to feedback, information, and report. Information criteria as effectiveness, efficiency, confidentiality, integrity, availability, compliance, and reliability. Internal control, a process affected by an entity's board of directors, management, and other personnel designed to provide reasonable assurance regarding the achievement of objective of the following categories: effectiveness and efficiency of operation, reliability of financial reporting, complies with applicable laws and regulations. Internal theft, also referred to as employee theft, pilferage, embezzlement, fraud, stealing, peculation, and defalcation. IT resources as application information, infrastructure, and people. In the previous example, the applications are the only factors that are directly managed in the process of acquiring and maintaining software. Inventory theft. Inventory theft can be stolen or misdirected. This could be merchandise, raw materials, supplies, or finished goods inventory. Kickbacks is cash payment that the vendor gives the employee in exchange for the sale. It is a like business bribe. Larceny. Fraudsters also steal the company's cash after it has been recorded in an accounting record. Management fraud, conducted by one or more top-level managers within the company, is usually in the form of fraudulent financial reporting. Management override involve top management's circumvention of the systems or internal controls that are in place. Misappropriation of assets, theft of any item of value. Misstatement of financial records involves in falsification of accounting reports. Monitoring involves the ongoing review and valuation of the system. Preventive controls are designed to avoid errors, fraud, or events not authorized by management. Privacy is the ability of an individual or group to seclude themselves or information about themselves and thereby express themselves selectively. Processing integrity. The risk related to processing integrity could be inaccurate, incomplete, or improperly authorized information. Reasonable assurance means that the control achieves a sensible balance of reducing risk when compared to the cost of the control. Reconciliation is a procedure that compares records from different sources. For instance, a bank reconciliation compares independent bank records with company records to ensure the accuracy and completeness of cash records. Refund fraud occurs when a customer tries to return stolen goods to collect a cash refund. Risk assessment, whereby it considers existing threats and the potential of additional risk and stand ready to respond should these events occur, whereby it considers existing threats and the potential for additional risk and stands ready to respond should these events occur. Salami technique. Use alter a program to slice an amount from several accounts and then credit those small amounts to the perpetrator's benefit. Sarbanes-Oxley Act. The act was intended to reform accounting, financial reporting, and auditing functions of companies that are publicly traded in stock exchanges. Security. The risk related to security is unauthorized access, which may be both physical access or logical access. Segregation of duties, separation of related duties. Scheming, where the organization cash is stolen before it is entered in the accounting records. Software piracy, the unlawful copying of software programs. Specific authorization means that explicit approval is needed for that single transaction to be completed. Spoofing. Spoofing occurs when a person through a computer system pretends to be someone else. Stewardship is a careful and responsible oversight and use of the assets entrusted to the management. Trapdoor alteration is a valid programming tool that is misused to commit fraud. Trojan horse program. RAM is a small, unauthorized program within a larger, legitimate program used to manipulate the computer system to conduct a fraud. Trust services principles are designed to be the written guidance for CPAs who provide assurance services for organizations. Vendor audit involve the examination of vendors' records in support of amount charged to the company. Vendor fraud occurs when vendors obtain payments to which they are not entitled. That's all. This and this is submitted by Alina J. Banyas and Lindley Lance Ricaros, Bachelor of Science in Accountancy, second year, and submitted to Justin Philip O. Batao, CPA.